Okay, what's up everybody? This is Scott here again with my next live trading video. Today is Tuesday, May 31st, last day of the month. And in this video here, as usual, we are first going to take a look at the broader markets because I do think we are seeing the beginnings of another major downside reversal across equities. And so in particular, we'll take a look at the S&P 500, the NASDAQ, and the Russell 2000, as well as the VIX Index, which measures implied volatility on the S&Ps to see, generally speaking, where option prices are right now across the board. And then after that, and mostly based on where the VIX Index still is right now, as you'll see here in a moment, I'm going to place a new short option position, which is also going to be a bearish position on Coinbase. And that's mostly to reflect, again, my assumptions here that we could be seeing equities return back to lower prices. Now, real quick though, in case you guys are interested in getting some free stock or some free money, I've got some very cool opportunities and promotions in the description of this video, so check them out. Right, so for example, if you want $200 of free stock from Tastyworks or a bunch of free stocks from Webull, free money from SoFi, etc., then again, check out the links in the description of this video. And then secondly here, in case any of you are brand new to the channel, again, my name is Scott, and I just want to let you know that you can find me on Skillshare as well, where you can take my very detailed classes on options trading or stock market investing. And I also provided some links to a few of my introductory courses in the description of this video as well. So be sure to check them out, and when you sign up for Skillshare using any of those links, you'll get a full 1-month free trial. Okay, so first up here, let's do a little bit of technical analysis on some of the broader market indexes. And first up, we'll take a look at SPY, which is basically the S&P 500. And so we'll go ahead and zoom in a bit here on this chart. And so as I talked about in my live trading videos last week, I do think the market indexes here have reached a major resistance level. Now for SPY here, this line I drew in, I have moved a little bit as of this morning. Originally, I had it pegged a few dollars lower, but of course, technical analysis is mostly an art compared to a science. So perhaps at this point, the S&Ps have topped out, at least for SPY here, at around $415 per share. Right, because as I mentioned at the beginning of this video, now we're starting to see perhaps the beginning of a major reversal in the markets. So the S&Ps right now are currently down by about 1%. And if this reversal does actually pan out, we could see the S&Ps return all the way back down to at least maybe $386 per share. Back down to these lows that we saw a few weeks ago, or a few days ago, I should say. And then, of course, as a bear on this market in general, what I'm hoping to see if that does actually play out is for this major support level at around $385 or $386 per share for the support level to eventually break. And then at that point, we could see even lower lows. Now, one very important thing to be aware of, though, is that this little down day we're seeing could just be exactly that, a small down day. The market's just taking a little bit of a breather, and then come tomorrow, perhaps we could see a resumption back to higher prices. Right, for example, looking back at this massive bear market rally that we saw in March, right, as you can see, we had many up days in a row and then a small little down day. And then after that, boom, the market resumed higher and made even higher highs. So once again, like I was saying, we could potentially be seeing that exact same kind of pattern playing out here as well. Right, the market has been exploding higher pretty much every single day in a row, and at some point, it's going to have to slow down at least temporarily. And just in the past few seconds I've been talking here, the market has already reversed by about 0.25%. So again, I'm still definitely thinking here we are going to see a resumption back down to lower lows. I'm still going to go ahead and place a bearish trade to reflect that assumption, but that's why I'm not going to lay out a bunch of new bearish trades today. Right, one of the most valuable things I have learned is to simply pace myself. If I'm bullish or bearish in the market, then fine, but don't make all my bullish or bearish trades in one day. Spread them out over many days because on some days you will certainly be wrong. Now also, what about the NASDAQ as well? So let's come back up to the top here and go to QQQ. This is an ETF which tracks the NASDAQ, and we'll spend just a few seconds on this chart here. And so there you go, very similar story. The NASDAQ as well has been rallying pretty hard over the past few days. And it's now pushing up against its own major resistance point right here at around $312 per share. But also perhaps this line is a little bit inaccurate. So let me go ahead and move it down a little bit, perhaps right there at around $310 per share. Right? Because again, this candle here may have been the high that we're going to see before equities turn down lower. And then finally, also, what about the Russell 2000, which is mostly small cap companies? So we'll go over here and go to IWM. And once again, very, very similar story. It also looks like the Russell 2000 is about to tap out here and perhaps could be resuming down to lower prices. So whenever you guys are also looking at the broader markets to figure out your directional assumptions on things, it's very important to look at multiple indexes. Don't just look at the S&Ps or just look at the Dow. Look at perhaps 2 or 3 of them at least. The reason being, of course, is all these indexes have different kinds of stocks in them. They are all weighted differently, and they will also move differently as a result. Although, of course, sometimes, as you're seeing here, they might all be kind of synchronized and tell the same story, but sometimes they might tell a very different story. For example, the NASDAQ on many occasions has been up huge, while the Russell 2000 here has been down. And so, of course, depending on the kinds of stocks you're trading, tech stocks with the NASDAQ or more small cap stocks with the Russell 2000, that's going to help dictate which kinds of trades you should make on each different kind of stock. And then finally here, the last major index I look at, which is not really an equity index, is the VIX index, which measures, as I said, implied volatility for the S&P 500. And just in case, for those of you who are not familiar with the concept, implied volatility basically is a measurement of uncertainty about a particular stock's future, or in this case with the VIX index, about the entire market's future. And that also has a direct impact on option prices. So basically looking at the VIX index will help you get a good assessment of how inflated or cheap option prices might be right now across the market. So real quick, we'll now go up to the top here once again and go to /VX. And this chart here pulls up the VIX futures contracts. And I typically prefer to look at the VIX futures market as opposed to just the VIX index, because the VIX futures market will give you a more accurate measurement of implied volatility. So let's go ahead and zoom in here on this chart. And so, of course, with all the major selling that we've been seeing across the market in previous weeks, along with that, we've also seen a huge increase in implied volatility or uncertainty across the market. So all during this time, option prices were steadily expanding or increasing in price, which was great for me or anybody selling options. That makes our profits much bigger, of course. And then with last week happening, with the markets rallying a lot, we saw implied volatility come back down. And so that's the major relationship between implied volatility and equity prices. When stock prices go up, investors become a lot more confident and calm. All that fear and uncertainty goes out the window, and implied volatility as a result comes back down. And therefore, along with that, option prices come back down as well. And then on the flip side, when large sell-offs occur in the market, people get a lot more fearful, and that's what jacks up implied volatility and option prices. And so today in particular, as you can see, implied volatility is spiking a little bit for the S&Ps, which is indicative that people in the market are getting a little bit frightened by even this pretty small down move that we're seeing so far today. And a lot of times large sell-offs are kind of self-feeding or self-sustaining in the sense that when people get scared initially, they start selling stocks, which causes more people to get scared. They start selling, and that kind of starts a chain reaction of more and more selling. So again, we're still only at the very beginning of a potential downside reversal in the market, which is why we'll have to wait for this actual week to play out to see if things actually commit to the downside or reverse and go back to the upside. But I'm still very much a bear on this market, so that's why today I'm going to go ahead and place a new bearish trade. And because implied volatility is spiking a little bit, that hopefully means I can get some better pricing for the options I'm going to sell here on Coinbase. And so with that being said, now let's go over to Coinbase, which is COIN for the ticker symbol here. And so Coinbase here in the past 2 or 3 weeks or so has basically doubled in price. Right, not too long ago, this stock was down to only $40 per share, and now it's at around $80 per share, 100% gain essentially. Now, personally, I do not care at all about the long-term trajectory of Coinbase. It could go to $500 per share again by, in a year from now. It could go down to zero. I don't really care at all. What I do care about is these short-term fluctuations of the stock price. And so along with my technical analysis on the broader market, along with the fact that, again, this stock has doubled in price in about 2 or 3 weeks, I do think it's time to see a reversal for this stock. Now, because on the chart here, as you can see, Coinbase did fall so quickly by such a large amount, there's not a whole lot of technical analysis I can do in this zone on the chart here. Right, for example, if I'm trying to pick out a resistance point on this chart, it really could be at the highs of any one of these breakdown candles. Although I would say with a pretty high degree of confidence, if Coinbase got up to around this price level, around $110 per share, basically at the base of this short-term bounce here, I would say that this is probably going to be a resistance point for sure. But all this space down here, it's very hard to pick. And so that's why I'm not going to go ahead and place an outright bearish trade on this stock, like selling a naked call option. I'm going to sell a bearish-skewed short strangle. And so in doing so, I'm still taking advantage of the very high implied volatility, not just across the market, but for this stock in particular. We'll take a look at that here in a second. And also, I'm still going to construct this trade to have a somewhat of a bearish bias to it. And ultimately, in doing so, as you can see when I make this trade, I'm going to give myself a lot more room to the upside for Coinbase to potentially increase in price further, and that will still be totally fine for my position. So basically, I want to give myself a lot of cushion with this trade to still be directionally wrong if Coinbase does still move higher and still have the opportunity to make a profit. Now, like I was mentioning, if we come down here and take a look at the implied volatility for this stock, as you can see in the past, it has come down quite a bit, which is fine, considering the IV got all the way up to above 180%, which is extremely high, even for an individual stock. This almost never happens. But even still, with the implied volatility having come back down significantly since then, it's still at around 120%, which is still very high, just objectively speaking. Now, Coinbase is also a very volatile stock with a pretty uncertain future, so the IV for the stock is pretty much always very high. But even for this stock in particular, we're seeing an IV rank of 52%, which is pretty good, and also an IV percentile of 94%, which is very good. So basically, these two metrics are quantifying in just one number, basically, how high or low the current value of implied volatility is right now for Coinbase based on the past 12 months. So right now, these two numbers are telling me that the implied volatility of 120% basically for Coinbase is still much higher than usual for this stock. And therefore, the option prices on the stock are going to be much more expensive than usual as well. And ultimately, that's why I want to make this trade today, to take advantage of those super high option prices. So now we'll come over to the trade tab and take a look at the option chain for Coinbase. And for this trade, I'm still going to go into the June monthly expiration cycle with 17 days left to go. Typically, I would prefer to sell my options a bit further out in time, maybe at least 3 weeks out. But unfortunately, the weekly expiration cycles on Coinbase are not very liquid. And so for my short strangle here, which again is a combination of selling both an out-of-the-money call option as well as an out-of-the-money put option at the same time. Let's start with the call side first here. And for the call, I'm probably going to sell this contract right here with a 95 strike. And as you can see here, this contract has a 26 delta, which basically quantifies how much the price of this contract is going to move roughly. It's an estimate for a $1 change in the price of Coinbase stock. So essentially, if Coinbase moves by $1, then the price of this contract will change by about $26. And then for the put side here, I'm going to sell perhaps the 55 strike put with only an 8 delta. The reason being is twofold. Number one, the strike of 55 is well below the consolidation pattern Coinbase was stuck in for the past couple of days. So real quick, let's come back to the charts and I'll show you what I mean. So all through this zone here where Coinbase was basically just consolidating, trading sideways, as you can see, it formed a base at around $60 per share. And therefore, if Coinbase does actually return back down lower, if I'm correct directionally on this trade, I want to make sure the stock does not blow through my put strike. So again, by picking my strike to be at around 55, which is right here, then I'll definitely be safe on this trade if Coinbase does come back down and once again get stuck in a consolidation pattern here. And then the second reason, coming back to the trade tab again, the delta on this option is only 9, which again means if Coinbase moves by $1, then the price of this put option is going to change by roughly $9. So ultimately, let's say Coinbase does move down by $1, and that's what I want as a bear on this stock, right? Then in particular for this put option, the price of this put is going to increase by $9. And that's going to hurt me as a seller of this contract, right? Every time I sell an option, I always want the price to go down because that way I can buy the contract back potentially for a cheaper price and make the difference as a profit. So again, I would lose $9 on this put option here, but I would actually make $26 on the call option, right? Because call options will decrease in value if the stock price also falls as well. So when Coinbase drops by $1, the price of this call option will also decrease by about $26. So in total here, the combined effect is I profit $26 on the call, I lose $9 on the put, therefore the net effect is I profit $17. And then of course also time decay always works in your favor as an option seller. Plus, if implied volatility does come back down for Coinbase or across the market, that's also going to help reduce the prices of both contracts in this case, which is going to be a good thing for me as a seller of the strangle. So now with all that being said, let's now go ahead and right click on the call here and we'll go to sell and strangle. And here we go. This is the order to sell one contract of the 95 strike call alongside one contract of the 55 strike put option. Total credit is going to be about $370, which is pretty good. And then last step is to go to confirm and send and check out the buying power effect on this trade. It's about $800, which is totally fine. Well under 5% of the account value here. So now we just go to send. And no fills yet on this order, so we'll come back to the monitor tab and perhaps change my price a little bit. There's my Coinbase order, and so I'll right click and then go to cancel and replace. And perhaps now I'll come down to maybe 365. Let's try that. Confirm and send, and send. And there we go, just got filled at 360. Had to come down a little bit more there. Great, and so next step is to create my closing order on this trade. So now we'll right click once again on the call, and this time go to buy and strangle. And here we go, this is my closing order to take my profits if I'm correct on this trade. So we're gonna buy back both contracts and do so as usual for around half price. So half of 360 is exactly 180, lock in that price, make it a GTC order so it's always in place, and confirm and send and send. And then lastly here for this trade, I'm going to manage it or defend it basically if I'm wrong by either buying or shorting shares of the stock if it breaches one of my strikes. Right, so basically if Coinbase crosses my call strike, at that point I'm going to purchase 100 shares of stock. If it falls below my put strike, at that point I will short 100 shares of stock, etc. But again, with this trade here, I intentionally gave myself a lot of cushion on either side to be directionally incorrect. So hopefully no management or defense will be required on this position. But of course, if it is required, then definitely I'll make a video on that and show you guys exactly what I'm doing to defend the position. And so with that being said, that's going to do it for this video. I hope you enjoyed it, and please let me know your thoughts or if you have questions in the comment section below. And don't forget, if you want some free stock or quite literally some free money, then check out the cool promotions and opportunities in the description of this video. And also, if you have an interest in taking some very detailed classes on options trading or stock market investing, then check out my Skillshare courses. Links also in the description of this video. And finally, if you enjoyed this video, then please give it a thumbs up, drop a comment, and subscribe to my YouTube channel. I drop new videos every single week, and you don't want to miss out. So thanks again for watching, and I'll see you next time.